Scott, welcome.
Brian, thank you for having me.
Glad you could make it.
Sure.
Let's jump right in. Gold has been around for 5,000 plus years. Is it still relevant? Is it still important as an asset class?
Well, I think so. I mean, when you look at every central bank in the world, they all still own gold. In fact, many central banks are buying it even today. Russia is accumulating gold. China is accumulating gold. South America countries are accumulating gold. So gold is that plumb line with which we measure every other asset class. So yes, it was relevant 5,000 years ago. It was relevant in Solomon's time. It's relevant in our times today. And I would say, Brian, as we go forward, and the more we print money, fiat dollars, euros, yuan, gold will have a place in the future.
So let's talk about the future for a minute. What do we see in the market? What do we see with gold in the next, say, 5 to 10 years?
Well, I think you've got to look at the overall market when you put gold in context, right? We're sitting on the Dow at 34,000 roughly. We're seeing the treasuries not paying much, but interest rates very low. So bond yields, even though they're low, are still a reasonable investment for conservative investors to put money in. But that has run up a lot, especially the S&P 500 and the equity markets. So when I think about gold's relevance in the markets over the next 5 to 10 years, my message to investors is that you need to be diversified. You need to have multiple asset classes. You just can't have equities. You've got to have real estate. You've got to have bonds. You've got to have gold or precious metals. And then, of course, you've got to have equities.
So it's really risky not to have yourself diversified. You've got to have yourself diversified going into these next 5 to 10 years.
It's very risky. And when you ask someone, am I diversified? They'll say, oh, yes, I'm diversified. I own Facebook. I own Tesla. I own Google. Yeah. No, you're not diversified. You're in tech and you're all in equities,
yeah.
Right?
Yep.
So gold and the fact that the Federal Reserve in the United States and really the ECB in Europe, every central bank is printing money to keep the economy going. Mm-hmm. You've got more dollars chasing fewer and fewer goods, which drives inflation, which means our buying power in the future, meaning what does our money buy, gets less and less. And for investors that want to diversify and preserve their buying power, it's not what you have, it's what you keep. And preserving your buying power is a way to do it. And gold has been the asset for 5,000 years that's actually done that.
So let's talk for just a moment about cryptocurrency. Is Bitcoin the new gold?
No. I mean, the short answer is no. Bitcoin is an asset class. And the characteristics of Bitcoin that make it popular today are that it's decentralized, or distributed, that it can't be minted. There are only going to be 21 million Bitcoin minted when it's all said and done. And right now there are 18 million that have been mined, okay? So 21 million is the max. So you've got classic economics 101. You've got a growing populace of investors that want to own it by putting wallets together. You only have 21 million. So supply and demand demands that the price goes up. But as a store of value, we'll see if it replaces gold or not. My personal view is that gold and Bitcoin have a place. Gold's an $8 trillion market. Bitcoin and cryptos are maybe a $1 trillion market.
Oh, wow. I didn't realize
that.
In
fact, gold might be 10 trillion as of today. So when you think about asset classes where equities are 70 trillion, so it's a very small component of the overall assets in the world. Gold and Bitcoin both have a role in the future. It's not whether one wins out over the other. It's how do you combine them both as a diversification against fiat and the overprinting of currencies all over the world.
Gotcha. So let's get into gold a little bit. What are some of the ways that somebody can buy gold?
Gold seems to be out of reach for a lot of investors, they think, but actually it's not. There are 4 ways in my view that you can own gold. First is you can own gold as a mining company. Okay, so you can own a gold stock as a mining company, and that mining company is got gold in the ground, and that's the asset. But what you're buying is the company. You're not buying gold. You can buy GLD, which is a gold security. Okay, so you can buy that on the stock market, but you can't go down to the GLD store and actually get physical gold, right?
Yeah.
Then you can buy gold in physical form, meaning, okay, I'm going to buy 10 ounces of gold and I'm going to get a gold bar.
Okay.
Or the most recent and the product that we're going to talk about in a minute, you can buy physical gold in a digital form to where the gold is stored in a depository and you've got an app that keeps track of how much gold you own. So you have digital gold that keeps gold sexy, fungible, transferable around the world at light speed. Easy as downloading an app on your mobile phone. And my particular product, FlexGold, is in the Apple App Store. In fact, we've got a screen up here. You can go to FlexGold, no space, download the app, and you can use your credit card. So here's a good example where you can buy, you can use your credit card, you can use your debit card, your Zelle account, you can use other cryptos, and you can accumulate gold on a monthly basis, or you could buy a large amount of gold and do it. And it's just that simple.
In a single purchase, you can buy it over a period of time, a certain amount each month.
You can. You see, it's as simple as putting in your credit card. You've got your account set up. Now you own it. It tracks with the price of gold. And now you own gold. You can go back and buy it the next month. You can transfer it to other individuals. Eventually, you'll be able to transfer it to other business for payment. You can use your wiring messages. If you've got someone all over the world that you want to transfer it to, if they've got an account with us, you can transfer the gold to them digitally.
So it seems to me, if I'm understanding this right, this is as easy as using a lot of the devices we're used to now. Our bank account, a credit card, Venmo, that it's really in the palm of your hand. Your ability to buy it, you're not going through brokers, you're not having to wait long periods of time. You can buy it right
Absolutely.
there.
You can buy it, it's right in the palm of your hand. And when you think about how we conduct commerce, right, we started out with bartering, if you go back a couple hundred years.
Yeah.
Then we went to coinage, actually carrying gold coins in our pockets. Then we went to checks, right? Or cash, if you will, carrying physical cash. Then we went to credit cards. Those were all banking rail solutions. The next generation is blockchain technology and digital money. So the US dollar is going to be digital, okay? You're going to have other stable coins. Bitcoin's a good example. Those run on what's currently not the banking rails. They run on blockchain. And that's the next generation of transaction processing. Eventually, the banks are going to be a part of that. But there are banking rails, there are blockchain rails, and digital money is the way we're going to conduct commerce in the future. And we'll be in a hybrid period where we've got a bank account that's using banking rails with fiat. We've got our digital money. And whatever the merchant that you're doing business with accepts, that's how you conduct commerce.
So the same way we're starting to hear about companies that are accepting cryptocurrency for the actual payment of goods and services, that's what we're likely to see with gold.
Well, that's what, certainly the US dollar is going to be the lead dog, okay? So you're going to see a digital money, the US dollar, being used on blockchain to conduct commerce. But to the extent that there are businesses that can't get banking solutions, or there are businesses that want to take bartering or high-tech transfer, gold could be a solution, especially internationally. You know, we're blessed that we've got the US dollar as the world's reserve currency. But if you go down to Brazil to the real, or if you go to Vietnam, or if you go over to Europe, these countries are experiencing, or Russia with the ruble, these countries are experiencing 10, 15, 20% inflation. They would much rather have an asset that's based on the US dollar, which gold is worldwide, to conduct commerce. So I think gold might have more relevance in the world economy than maybe it does in the US.
Gotcha. So how do we get this Flex app?
It's very easy.
Gold Flex app.
As I mentioned before, it's in the Apple Store. So you can easily...
And it's there now.
It's
we can
there
do it right
now. This isn't vaporware. It's there now. You can download FlexGold, F-L-E-X, gold, no space. Set up your account. Put in your credit card or link your bank account or your Zelle account. You can start to accumulate gold. It's physical gold in digital form. It tracks with the spot price of gold, and you're in the gold business.
So this isn't future for us. This is, you can do it right now.
You can do it right now. Get FlexGold. If you want to diversify, if you want to have assets that help hedge you against fiat, FlexGold is the way to do it. You can own gold many ways. This is the digital way. It's an app we have. I think you're going to like it. I can't wait to see other investors get involved.
And it's the easy way.
And it's the easy way. Think about it. You've got your assets with you wherever you are on the planet, and it's in your phone.
Oh, yeah.
It's so easy you can do it with one hand.
That's awesome. Scott, thank you so much. Really appreciate your coming in, telling us about this, and giving people an opportunity to try the FlexGold app.
Brian, it's my pleasure.